Well, good afternoon, and everyone, as we head into US trade on Tuesday, the 29th of August. I'll flick across the headlines, but there's not really a lot to go off other than what we spoke about a little bit earlier on. Oil ticking up higher off the back of the hurricane situation worsening, which we were speaking about in this morning's session, which is no real surprise, but we'll be looking for further updates over the coming days as to whether that does intensify and potentially even shut down some oil refineries. But apart from that, other than China, not really a great deal for us to go off in terms of fresh headlines or fresh news flow to hit the wires. But we've had a bit of movement across yields. Bonds have been sold and yields have pushed higher. Now that hasn't really reflected itself in equity markets. Equity markets have been a bit choppy, but we've seen pretty broad-based US dollar strength step in over the last number of hours. Now yields pushing higher has put some pressure on the Japanese yen. Australian dollar, Kiwi dollar have turned around slightly, but nothing kind of too major when it comes to them. Really the movement has come from the US dollar in line with those US yields pushing higher, which we'll have a look at now in a minute once we get around to it. But it's not on the calendar, there's nothing really on the headlines to really suggest this move. I mean, this home price index can be consensus, but I mean it's not really too much. That was only 25 minutes ago as well. So in terms of actually putting a reason to this, there's no real kind of immediate catalyst. But there's obviously the trend in the dollar, which we'll have a look at in a minute, which has been prevalent over the last couple of weeks. So we'll have a look at that now in a second. But job openings 3 o'clock probably isn't really likely to shake markets up too much. Markets have played their hand today, which is yields higher, which the US dollar has followed. Now yields popping back higher. US dollar is strengthened, even in line with a bit of a pullback in yields. We can have a look at the US dollar and just flick up the dollar index. You can see that uptrend has continued, even in the midst of yields kind of chopping sideways and even pulling back slightly. They have started to push higher again, which has put some upside pressure on the US dollar, and that's across the board. You can see the Aussie, Kiwi, Euro and Sterling all pushing low. You can see dollar CAD, dollar yen, the dollar index all pushing higher. Dollar Swiss not by too much, but it is grinding higher as well. So pretty broad base US dollar strength. Come back to the grid and you can see US dollar strength no matter where you look at the moment. Now you'd expect that sort of a move with yields to push higher for equities to push lower a bit, but they've managed to hold firm. You can see the S&P, the Dow Jones, the Nasdaq and the Russell all holding firm as we head into US trade today. Now the fact that this is pushing higher without equities pushing lower suggests to me there's a bit of underlying strength, maybe supportive and propped up a bit with China lending some support to their economy. But the equity markets have been pretty choppy today. I mean, the FTSE had a bit of a spike higher at the open after a pretty aggressive rally in the overnight session, playing catch up as it was closed for trade yesterday. But chopping sideways on equity, so not too much to see there. US dollar strength, yield strength, which has sparked a bit of downside in the price of gold. So if that continues higher, you have to imagine gold looks pretty vulnerable if it can get somewhere below 1913. We were looking at this morning's video, and yields are at the lows, making an attempt at breaking through these recent lows, looking for them to continue lower, which would have sparked a bit of downside in dollar yen. That didn't play out. Dollar yen's popped higher in line with yields popping higher, but never broke through the support level, so nothing really to see there. Obviously no trades initiated off the back of that. But apart from that, I mean, it's still largely stuck in recent ranges. I mean, stick this back to a 4-hour chart and just zoom out a bit. Euro dollar is the one with the kind of clearest direction, but Aussie, Kiwi, okay, we've had a bit of downside, but they're really kind of chopping sideways when you look at it. Dollar yen, dollar CAD, no one's with upside. Euro dollar has failed to break through lows, or hasn't reached the lows yet, should I say. Cable has tried a few times to get through these lows to the downside and hasn't really worked out so far, but the longer term trend is still down on the dollar block, obviously up on the US dollar pairs. Dollar index continues its march higher, and that probably looks set to continue into US trade today. Yields, what you need to keep an eye on, the fact that they didn't push higher or push lower maybe as we were expecting earlier on. They continue to push higher, should prove supportive for the US dollar. In terms of best things to pair it against, then any move driven by yields, dollar yen's always the trade of choice. a little pullback on that wouldn't be unexpected. But I think cable looks a good sell, and any rallies continuing to go forward, with grocery prices in the UK cooling down, or as I said earlier, not rising, rising at their slowest pace for nearly a year. That would suggest inflation is beginning to come under control, and with interest rate hikes priced in above what markets will probably need, or what the central bank will probably want to do, I have to imagine sterling continues to be a sell on rallies. But euros, sterling do seem vulnerable. Aussie, Kiwi all seem vulnerable to the US dollar. Inflation continuing to cool down. All these central banks looking at stopping hiking interest rates. The Fed as well. But economic data in the US continues to be more positive than their counterparts in the G8. So US dollar, long US dollars has been the way to play it over the last number of weeks, and that probably looks set to continue in the coming week ahead, especially if we get positive US economic data a little bit later on in the week.